Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the 2021 volume profile, where after a couple of weeks of resistance, price managed to close a weekly candle inside the value area, increasing probabilities to move to the point of control, and then closing a weekly candle above the point of control is increasing probabilities for price to move to the value area high. Now, I won't be surprised if price still wants to retest this area over here, as it has been such an important level on the chart over the years. Support, arguably support, resistance, and then maybe acting as support once more. And one of the scenarios that I have coming up is a potential rejection over here and then move down to stay in this range over here, after which we then find support and look for upside once more. If we go to the medium time frame on the 12 hour and we look at the bullish scenario, then we're looking for still a green 4 to be made before an impulse to the upside in the green wave 5. So we have a couple of 1-2s over here, giving the fuel for price to move to the upside in a bigger wave 3. And also, if we look at the volume, we can see the peaks over here to the upside, something that you like to see in a wave 3. Then we have a couple of 4-5s over here, and we can see that volume is slowly averaging towards the downside. Now here you can see this wave 4 of a lower degree ended nicely after the 1-to-1 over here. This fib time 1-to-1 taken from the high to the low over here to the high of wave 3 to compare wave 2 over here with the length in time of this wave 4. Most commonly a wave 4 is a little bit longer than wave 2 in time, so this is nice to see. And this wave 4 also went to the blue box. It retraced to this blue box, which is the area of the wave 4 of a lower degree in wide. This box over here represents the price area from this high to this low, which is basically the price area of this wide wave 4 of a lower degree, because the wide count is a sub-degree count of the blue count, and the wave 4 of a higher degree, being blue, likes to retrace to the wave 4 of a lower degree, finding support here, moving to the upside. Now in this scenario, that once more can be interesting, but the higher price goes over here, the less probabilities price is going to come down to this green box over here, because this green box is the wave 4 in blue, so taken from the high to the lowest point of wave 4 blue, and you get this green box over here. Wave 4 of a higher degree, being green, likes to retrace to the wave 4 of a lower degree here in blue. That is not a rule, it is not a guideline, it's just something that you see very often, so therefore it remains interesting to keep an eye on what price does. And we can also see the price area is between 38k and 34.7k. Now something else we can do, of course, is taking a fib from the low of the green 2 to the current high that we have over here. Toggle on the wave 4 targets, and you can actually still see that the green wave 4 target area over here is in confluence with the fibs, the 0.382 and the 0.5, and these are still common targets for a wave 4, but the higher this move is going, the higher these fibs will go, so the 0.5 will move to the upside as well. And the 0.5 is usually a maximum target for a wave 4, with the 0.618 being an invalidation. This is the bullish scenario, getting a move down, eventually a continuation up to finish wave 5, keeping in mind that value area high on the higher time frame, where in the more bearish scenario, we are soon ending a wave 5. So not a wave 4 or a wave 3 here, then a 4 and then a 5, instead ending 5, looking for a bigger move towards the downside. In this scenario, the first wave 2 is longer, 1-2, looking for 3, 4, and then eventually finishing wave 5. After this wave 5, there is two options. Either on the high time frame, we are looking for an ABC and we get a bigger move down, or we're going to look for a 1-2, 1-2 and eventually a bigger move up. Arguably, there's another count where this long range over here is a 4 and this is a 5, but it's not really something I'm looking for at the moment. So based on the two main ideas, either down or up here, also mentioned in the cycle, macro and high time frame video I've done and do every Sunday, so make sure to check that out in the playlist on YouTube. We are looking here for then a 3-wave structure to the downside. for a continuation up and then a wave 2, or we're going to be looking for a wave C, where this is then a 1, 2, 3 for lower prices. Now the support area is quite interesting, because if price can manage to also go a little bit higher, we can stay in this range for a bit longer as well, right? The range of 2021, but then over here in 2023, 2024, we're going to be in the same range, which of course is interesting here, where the point of control remains an interesting level at 38.7, but the most common target area for a wave 2 is between the 05 and the 786. And if price is going to move to the value area high, and you can see I pulled these fibs from the low over here, or from the low of 1 to the value area high here, then you have a little bit of confluence between the golden pocket 786 area, the value area low of the range, and the big support resistance area. So this is going to be a very, very important support area, sitting between 34.3k and 30.2k in this scenario. If we then zoom into more local structures, we go to the 4 hour, then, well, that went quicker than expected. We were looking for that 2.618, right? If price can break the 2 here, we were looking for the 2.618. It basically managed to do so in one candle. Retest of the 1.618, common target for wave 3. Retest, move to the 2. What we like to see, another candle closing on the 2, but the next one, lift off, 2.618 hit. The resistance that we had in the meantime was not respected at all, which can now act as support. So this is now, of course, a support area here, sitting between 42.9, 43.6. And we also have resistance just above. Same story repeats. If we can pass the 2.618, the 3 becomes interesting just below this resistance box here, 45.2 to 46k. Eventually, after this wave 3 is in, we're going to be looking for a wave 4 and then another push towards the upside in a wave 5, where preferably we're going to see then a new high on lower volume. As it stands, volume is increasing as price is moving to the upside, so we're still looking for eventually a 4 and a 5 on lower volume. If we zoom in to that yellow wave 3, right, the higher degree count is 1, 2, 3, 4, 5, and then inside the yellow wave 3, we have the white count, right? 1, 2, looking for 3, 4, 5. Then in white, we have now reached the 4 extension, taken from the low to the high of 1 to the low of this wave 2. If we're looking for a wave 4 in white, then this is currently the price area that we have to keep an eye on, 43.2k to 41.2k, with the invalidation being the 0.618 at 40.3k. However, this could still push once more to the 4.618 as well, 45.6k, and then make the high for 3 to go down for 4 and 5, because I also still have the even lower degree count, which is the pink count here, 1, 2, 3, 4, 5 inside the white wave 3. Because the thing is, so far we are moving up in volume, so I am eventually looking for a couple of 4-5s to be made where volume is going to slow down. And this is what I showed sometimes in a couple of videos as well, right? Previously, where, hey, we have a couple of 1-2s, volume equal, then we get to push to the upside. We want to see volume increase, but eventually you're going to end up with a couple of 4-5s, like a bit of a range grind towards the upside. And we want to see volume decreasing. And locally, the lowest impulsive structure I have here in pink, we are also still looking then for that wave 4. So we then have in white here, just for perspective purposes, right? We have the 1, 2, 3, 4, 5, and then inside the white 3, we are looking for another 1, 2, 3, 4, 5. Inside this 3, we then have another 1, 2, 3, 4, 5. You get the idea. So currently for this pink wave 4 here, targets of course quite similar, but we have a target area between 43.5 and 41.8k, invalidation at 41k. Nice little area here. We do have some volume support down here as well, which is 41.750, important current weekly and current monthly point of control. However, more locally, I think it is way more interesting to also look for this 30-minute gap that we have for price at the moment, because price moved to the upside, created a bit of a gap over here, then a red candle, and the high of this gap now, which is the low of this red candle, can act as important support. Usually you see a reaction at least once. If price is going to close candles inside here, we can expect price to fill the gap, but usually the first time you hit it, you get a reaction for potential upside. Now on the micro, yesterday we were looking here at this corrective structure, and this is uncommon, but hey, you never know, right? We can see it, A, B, C over here, 535, wave C going to the 0.618, rare target for a wave C. Not common to see this at all. It is a target nonetheless, but it was mainly important to look at the CVD divergences as recommended yesterday as well, which will give us insights. And also, as mentioned, right, we have to look at the volume. If volume is increasing, we get continuation of bullish CVD, we can expect a move to the upside, which is also eventually what I was looking for locally. So when I was observing the reaction, I said, hey, that yellow CVD continues to show bullish CVDs. There are no bearish CVD divergences to be seen. Then later the 886 was hit, so probabilities are higher for continuation, because after the 886 any reaction down would be a C or Y, so you still expect a move to the upside. But with those bullish CVD divergences building here, probabilities higher to move towards the upside, which is the move that we eventually got. And now more locally here, we need more time, right? It takes a little bit of time for a range to form, and then once the range is forming, we know what's going on. Same with the CVD divergences. At the moment, it doesn't really make sense yet to look at these CVD divergences. Nothing is going on, price moving down, CVDs are moving down, that's fine. I like to look for the CVD divergences on the right side of this recent high. So for basically bullish CVD, I like to see a move up and then a retracement, bullish CVDs here. For bearish CVDs, then we are looking for bearish CVDs with the high over here, and then the target is going to be the low. So we need to give price a little bit more time here locally. But this 30-minute gap is definitely going to be very interesting. What I also like to do on these lower time frames usually is basically have a channel on the chart here, right, which is always interesting, arguably with the high over here, and also have a volume profile on my chart, which then gives me an idea of how the volume is being distributed in this range over here. Now, if we then finally look at the probabilities of the different scenarios on the different time frames, then on the different time frames, we are still looking for price to move towards the upside. Quite difficult at the moment to know on the medium time frame which of the two bullish scenarios is preferred, or actually, like, you have the bullish one, of course, where we go down for 4 and then 5, and the bearish one where 5 is in. In both scenarios, we still expect to move up. Eventually, we're going to look for the rejection, and then based on the move that we get to the downside, that is when we can observe the probabilities of these two scenarios. It's just that we are very, very extended now, right? We might run out of steam soon. We are expecting some sort of a rejection to come eventually, but on the low time frame, medium time frame, looking for upside, and on the micro, waiting for a range to get some more clarity over here. But generally, we are looking for more upside, but late longs, watch out. Early shorts, watch out as well. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.